Hello, everyone, and welcome to this week's podcast from July the 22nd. It's actually July the 21st for us as we're recording this on the 21st, but it'll come out on the 22nd. As always, thank you for joining us. We have had quite a bit of action happen over the past week. And as we start most of these podcasts with, we're going to go ahead and dive into talking about U.S. equities, because that has been a big story this week, over this past week, and a lot of the action that we've seen. We've seen the S&P 500 return back to a buy signal with action this week. Did so on Tuesday by breaking a double top there at 39.25 on the 25-point per box chart for the S&P. With today's action, we're seeing it move above 39.75 intraday and inching closer and closer to that positive trend line that sits at 4,050 right now. And to move above 4,075 would actually move it back into a positive trend. So finally seeing some positive action in some continued format, at least, rather than just positive days.
Yeah. We've had some nice days, and I've noticing that we've been kind of buying into the afternoon hours versus selling off into the afternoon and overnight hours, which had been the case previously. So this is the direction that you wanted to be seeing. You mentioned that positive trend line for the S&P. Well, we're really negative trend line that would be violated with that break to 40.75. After that, you have resistance at 41.75. If you want to round off and call it 4,200, I've seen a lot of other strategists and firms put out that some levels that they've been looking for some near-term resistance, and that would coincide with our chart that we have pulled up here as well.
Does, but one of the interesting things that you and I have talked about a little bit this week, and it's this conversation started a little bit last week, and one of the things that was interesting is we were looking at indicator action for the S&P, and we were actually primarily looking at the bullish percent for the S&P. But one of the things that got both of us as we were looking at it was the fact that we looked at the bullish percent for the S&P mid cap 400 and small cap 600, and we still saw both of them in a column of X's, and they had never reversed down. Now, we saw a lot of indicator action, and we'll get to that here in a moment, but one of the interesting things that led us to was looking at small caps and really, looking at the primary small cap index right now, the Russell 2000. It gave a return to a buy signal recently, breaking a triple top there at 1,800, and is now just similarly to the S&P, a few boxes away from its bearish resistance line on the chart, on its 20-point per box chart. On that 20-point per box chart, a move above 1,880 would flip it back into a positive trend. And what's been interesting, I think you threw the performance stat out earlier, but near term, we've seen that outperformance out of small caps, which really in some way hadn't seen when we saw this rally sort of occur back in March. And that's at least some kind of positive in some fashion.
Yeah, that is a positive. I like to see small caps lead when you're coming out of market environment scenarios like this. I've said it before, kind of a sign of a bit more risk taking. Small caps inherently are a bit more riskier to invest in than some of the large cap, most researched, well vetted, most successful companies in the world, I would summarize. So Russell 2000 over the past 7 days is up about 6%. We'll call it 5.9%. The Nasdaq was up 5.8%. S&P was up 4%, and then the Dow was up about 3.5%. So small caps led over the past week. And then if you look back over a trailing 30-day basis, the Nasdaq composite is up about 10.2%, but small caps are right there with like 9.75%. So pretty good showing from your just broad-based Russell 2000 small cap, in addition to that positive chart move. So definitely look to see some further follow through there. And I think that gives the current rally for the market a bit more legs as well.
Well, and it's sort of twofold. That's part of it, is not only are we seeing small caps, but the conversation then goes to that, the conversation that feels like has been ongoing for 2 years now, value growth. Looking at value growth, when you're seeing a resurgence out of small caps, typically a little more growth heavy than the mid and large cap counterparts. But when you're seeing that resurgence, it's oftentimes a resurgence that you see out of the growth space in general. And I mean, nonetheless, we'll get to that point here in a minute about looking at value versus growth. But a lot of this positive action, especially over the past week, has led to a lot of positive action on those indicators, as we noted earlier. with action on Tuesday, following Tuesday's action, we saw the positive trend for the S&P PT SPX, as well as the PT for the mid cap 400 and the mid cap 600, all reversed back into a column of X's. In the case of the PT SPX, we saw it reverse up indexes at 28%, now sits at 30%. So had gone below that 30% level, now just peeking back above it here right now. But it also, a lot of that coincides with further positive action that we've seen on those indicators, like the bullish percent for the S&P, as it's climbed up now to the 50% level, which I remember talking about this yesterday, and it was at 44%. So now we're sitting right there at that half mark, seeing stocks now, the majority of stocks trading on a point and figure buy signal within the S&P 500, and seeing stocks move back into a positive trend. So in one aspect, check and check. We're getting something going here.
Yeah, and we say a lot too. We're looking for additional confirmation. We don't have one silver bullet here. To your point now, there's a lot of technical indicators that have reversed up into a column of X's. So if you're looking for that additional confirmation, you've kind of seen it here. I would say if you're rules-based, your objective, I'd say if you're not at least thinking about adding some more money right now, I don't know what else you would be waiting for. There could be some bigger things, of course, from an asset allocation perspective that could maybe adjust. But in terms of kind of deploying some near-term cash right now, there's a lot of positives. There's another indicator that I'll highlight after I make one comment on PTSPX. That positive trend chart, like David said, up at 30%. You typically see the best forward returns for this indicator after you get above 50. So someone should say, well, why is this good right now? Really, because you're moving in the right direction. This had to happen. You had to get a reversal up to start moving in the right direction, which you got. And then that clearance at 50 would be, I think, an intermediate to better longer term signal as well. The other indicator that I wanted to highlight that also gets a fair amount of attention in our research is the high-low indicator for the New York Stock Exchange. So it measures the percentage of stocks hitting new 52-week highs relative to those hitting new 52-week highs and 52-week lows. So all stocks hitting 52-week extreme. That reversed up into X's yesterday as well. It reversed up from 4%. So for perspective, the March 2020 low for this indicator was at 2%. December of 18, it also bottomed at 2%. So one box lower. This is also, more importantly, in my opinion here, the second reversal up from south of 10%. In 2020, you had a V-shaped recovery bottom on this chart. We'll have this on the YouTube channel so you can see what we're talking about here. But in 2020, you had this V-shaped bottom for the indicator. In 2018, it was the second follow-through that ended up being the follow-through, if you will, for the market. You saw it in 2015 and 2016. You saw some big double dips there, but it was always that kind of second follow through, that second reversal up from south of 10% that ended up being your follow through. So I'm not saying that this is any type of guarantee that is going to be the case now, but there is historical precedent for once you get that second reversal up from south of 10%. It's typically been also a pretty good sign for your market, at least for the near term.
Well, and adding a little bit more to our evidence as we've been talking about sort of this improvement in small caps, seeing this indicator action. And also we lead into, as we noted earlier, the value versus growth conversation. For much of this year, it's favored value. And we saw that dynamic playing out for much of 2021, saw some flip-flops back and forth, saw value take the reins really at the start of this year. But recently, especially just since the beginning of Q3, it's somewhat coincided with that small cap improvement, that rally in that space. Because when we look at that full iShares lineup of the 9 size and style box ETFs right now, we find that the top 3 performing are small cap growth, IJT, large cap growth, IVW, and mid cap growth, IJK, all up over 7% so far in Q3. And from there, the remainder of the 9 and size style box 6 size and style box ETFs are in positive territory for the year, and even for this quarter. Well, not positive territory for the year, positive territory for this quarter, pardon me. But not to the extent that we're seeing the growth. I mean, right now you're seeing small cap value lag its growth counterpart by roughly 5% in Q3 so far. So seeing some of that divergence by the growth counterparts, and especially within that small cap space, begins to add a little more weight of the evidence type of story that we're finally seeing some of these things turn positive. As Will noted, you feel like you can begin to dip some toes back in. I know I've talked to a lot of folks here recently. They've found some pretty good trades, have done quite a bit of trading, and felt like they've done quite a bit of trading recently. But for the most part, what we've seen emerge here recently, especially within some of these near-term trends and developments, have been very material, and a lot of this is circled around things that we didn't really see last time in March when we got a pretty significant rally, and that is what we leave you with. We hope to see more and have more information for you as we move on into next week. But, well, I apologize. We forgot one conversation, didn't I, Will? We have one more thing we need to talk about.
You're going to surprise me. I don't know what it is, but tell me.
Well, it was going along that value versus growth conversation. And one of the things that I did want to mention, because I saw it right as we were getting on the video, that we've seen that RPV versus RPG relationship reverse down into O's intraday right now. So it at least appears that we're going to potentially see a reversal on that RPV versus RPG chart. That point, it'll favor RPG on a near term. Still technically remains on a buy signal at this time, but is something to be aware of, the fact that we've seen it reverse down for the first time in 2022. So adding further to that growth, small cap potential, and really we're all sitting here rooting for it, if you will. So again, that's another relationship that we continue to watch.
Yeah, certainly. RPG, you had a positive trend change yesterday on that chart, furthering that kind of absolute movement, consecutive buy signals. So it's been a lot of this year. People asking, is it one or the other? I think there's been a case for both for most of the year, and kind of having a balanced approach there has served well. I don't know if it's super clear to see if you're going to get a baton change right now with that signal, or with that column change, but would at least be an evident sign that maybe you could start to balance those exposures a bit more stylistically in your portfolios.
And with that note,
we go.
Until next week.
Cool.
I knew I'd forgotten something as soon as I was getting ready to end it. I was like, this feels short. Nonetheless, we always appreciate everyone joining us on the podcast. It's been an interesting week, and we wanted to pass along as much info as we could, as we've seen quite a bit of interesting developments. But as always, tune in on YouTube, as well as for those subscribers that we have on our platform next week for the podcast that we bring out, and we'll bring you up to date on anything that we've seen over the past week. So again, thank you, and enjoy the rest of your week.